Hi, this is Katie Thomas with Clayton Nash Real Estate here in Phoenix, Arizona, and I'm back here with Alan Fredrickson from V.I.P Mortgage. Alan, thank you again for being with us.
Very welcome. Thanks for stopping by again.
So today we are talking all about what do you need to get a mortgage or get your pre-approval. So Alan, what do you need?
The first step is actually for us to get a loan application. You can do that a number of ways. We can call you. We can do it over the phone. Usually takes about 15-20 minutes depending on the complexities with it. You can also go to our website at allenlens.com and fill one out. Usually takes 10-15 minutes. Once that's done, gives us the opportunity to be able to pull your credit. Along with that, there's a general needs list of paperwork that we're going to need for the pre-approval process. That's going to be bank statements, pay stubs, W-2s, and tax returns. If you're self-employed, obviously, there might be business returns involved in that, but that's kind of a general list of how it goes and what we need.
Okay. What do you do with the information after you get all of this stuff?
Once we get all of that stuff, we look it over. We figure out exactly what we can use for your monthly income. The next step is we take a look at what debts you have between car loans, student loans, maybe other mortgage payments, different installment loans, credit cards, and we have to compute what's called a debt to income ratio. And that's actually how we do the whole pre-qualification process. Is we look at your gross income or net income if you're self-employed, and that goes into a fraction with your debts.
Okay.
And as long as that fraction is roughly under about a 45%, that's usually kind of the magic. Sometimes maybe to 50, but 45 is better. But
45 is your magic number?
Right.
Okay.
45 is usually the magic number.
Okay. So what are people most surprised about as they go through this process?
I think the biggest thing probably is most people are expecting to be approved for a price.
Okay.
So they're expecting to hear me come back and go, all right, you're approved for $300,000 or you're approved for $350,000. Actually, you're being pre-approved for a payment.
Okay.
So you're actually being qualified for, okay, you're going to be qualified for a $1,500 payment, which could equate to a very vague number,
right, between
$200,000 and $300,000 because it depends on how much money you're putting down.
Sure.
It depends on if you're buying a condo versus a house, and there's a big $300 HOA. So I think that's probably the biggest misconception.
Okay. So if you have that $300 HOA, that reduces the, say, $1,400 that you were approved for.
Right. So you figure a good rule of thumb is about for every $10,000 of loan amount, it's about $50-ish in payment. So yeah, I mean a $300 HOA, that's going to be somewhere between $50,000 and $60,000 of loan amount. Okay. Okay.
Anything else we should know about the pre-approval process and what we need to be prepared for?
I would say the sooner the better. A lot of times there's surprises on people's credit reports that they don't know about. So, you know, if you think you're going to buy in a year, don't hesitate to start the process now because you can at least put a game plan together if there is something you need to work on.
Yeah.
Feel free to, our information is on the bottom. So go to my website, give us a call as soon as you can.
Awesome. Well, thank you so much for taking your time. And for those of you that have any questions, please feel free to reach out to either myself or Alan. We're more than happy to answer any questions you have. And I will tell you, applying for a loan isn't half as scary as it sometimes seems to be. Thank you.
No, it's not.
But thank you so much for your time today. And thanks for tuning in. And we'll see you on the next one.
Thank you. That was good. Short.